Hey guys, welcome to another Trade Genius podcast. Bob and Phil here, as always. Guys, in this market, what you see is not what you get. We're going to explain the dynamics of what's going on this week in the market, as well as what's going on behind the scenes with savings and also the real story behind inflation. You're not going to want to miss this one, so let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Hey Bob, so I thought you found some interesting data on, and it kind of is going to tie in with a lot of what we talk about, but the savings decline in this country is coming down at a pretty alarming rate.
Yeah, so this was the other chart I was talking about when we did our podcast yesterday. This is the excess savings, if you will, that people have that they say people are going to use, but it's collapsing. And we already know that the bottom half of the population is already maxing out their credit cards and are at 21% interest rates average. So they're in what's known as a debt trap right now. And then people on the other end of that spectrum, I would put myself in that category. I'd probably put you in that category too, Phil, is we're not spending our excess savings. And so you can see it now in the retail environment that sales just aren't happening at that level. And eventually that translates all the way through the food chain, if you will. And then with costs rising in other areas, it's another basically recession trip point. But that's not really what we want to really talk about today. I just want to talk about maybe the sleight of hand that government uses as they try to massage you into being in the wrong position at the wrong time. Hey, Phil, why don't you throw up the core U.S. CPI chart?
Yep. Okay, here you go.
So all we keep hearing about is that, hey, inflation's going down, right? Everybody hears that.
Right.
Everybody's nodding their head listening. Inflation isn't going down. Inflation is growing at a slower speed.
Yeah.
And government plays this sleight of hand all the time, Phil. And before we got on this thing, I was explaining to you that Janet Yellen's going to increase, all things being equal, Janet Yellen is going to increase the money supply of dollars by 10% over the next 2 years. So we could say roughly 5% increase in the money supply just from the fiscal environment. So and the Fed only has, I think, $2 trillion on their balance sheet or so, or $4 trillion. So, unless they take that thing down to zero, which they can't, and if they want to get rid of inflation, that means the banks have to basically implode and debt has to be wiped off the books for that to happen.
Right.
And so they have shown no appetite for that, Phil. So I would say 5% is probably where we're going to be stuck at for a while. And then you found a really interesting chart. If you want to show the cumulative, because this really shows. They should show this chart instead of the chart they always tell people, oh, inflation's going down, but really is it? So why don't you throw this chart up, Phil, and explain this to folks?
Yeah, so this is the US CPI. This is the cumulative CPI. So when they're telling you that, oh, inflation is dropping, what they're saying is the rate of inflation is dropping, not that inflation is dropping, because if inflation was dropping, you would see this line actually go down at some point, and you'd actually see negative inflation numbers in these inflation reports that you read in the headlines. But what this is this line is basically showing you how much more expensive things have gotten, especially through the COVID, and how much more expensive they are remaining to be. And as you can see, as long as we get positive inflation numbers, and normally historically they're 2% and lower, but this is how quickly inflation has come up, and it's not going anywhere. And that's why we've said before in the channel that really what we need to really kind of correct the inflation problem is to see this line go down, which means we would see deflationary quarters in this market. But guess what comes with that? Usually recession. And so it's a matter of, you got to take medicine sometimes to correct the problem. And whether you like recessions or not, I actually think this time it's pretty necessary. Something we've been avoiding for over a decade. Really haven't seen a recession. We had a little blip in COVID, and if you go off the historic rule of 2 declining quarters, we had a little blip prior to the end of the year last year, and so now here we are with just raging inflation. Okay, so this is the one that really matters, is this number here, this chart here, showing you how much we've absorbed, you and I, how much this is really a measure of your purchasing power. Okay, it's been totally eroded because of the fiscal policies of the government, of the Fed, and this is what we're dealing with now. So that's why we say when you hear these numbers, you hear that the inflation's coming down. It's really not the whole story here, Bob. And you're right, they don't ever show this chart because no one would ever get reelected if they did.
Well, and speaking of deceptions, Phil, we've been taking a lot of flack from people saying new bull market, people are FOMOing in. But is that really the case? Can you explain to people, because we deal a lot with derivatives here, can you explain to people what's really happening going into this Fed meeting?
Yeah, so we're in a new age of derivatives, and so what happens, and people are wondering why the market is going up at a parabolic rate at this point. Okay, well, so we've shown you guys that the breadth is horrible. Most of the technical signals are firing off major sell. These are moves that are fairly rare. I think on the Nikkei is also doing this in Japan, and I think this is only the 3rd time in history it's gotten this overbought. So they're all situations where you're going to see a rug pull, basically, because the previous 2 examples, at least on the Nikkei, were basically Eiffel Tower moves. But what drives this? Why is this happening with such weak breadth? Because this has been the best hedged OPEX, best hedged FOMC event that we've seen maybe ever. And what happens is it takes very little money to place a bet on options that say, well, we think the market is potentially could go up here, right? And so what the dealers have to do is, as the market rises, it almost becomes, sometimes you get into this self-fulfilling loop if it starts. Okay, it doesn't always start, but sometimes if it starts, you get into a self-fulfilling loop, and as the market keeps moving higher, they have to actually keep buying the underlying assets. So some of these stocks in some of these companies right now, the AI meme and all that stuff like that, they have to buy that underlying because people are betting on the upside, but they're betting out of the money higher. Okay, and so when those bets start to come in the money, then the dealers are forced to push into that area, so to speak, because they've sold them a bet. That bet is now increasing rapidly in value. They've got to hedge that bet by buying the underlying, because when they sell you an option, let's say they sell you a call, they're effectively short or exposed short on that position. So they have to buy the underlying to neutralize that exposure. So it's called being delta neutral. So not to overcomplicate it, but essentially is, if there's so much bets to the upside, people are willing to spend the money and risk that money, because that money doesn't always pay. It could evaporate and go to zero. And a lot of that's been happening this year too. But for this particular move into this particular OPEX, it's actually been forcing the dealers to buy up into it, and we're reaching an apex of that now. And once this comes off, so the point here is that once OPEX is done, all of that like automatic bid pressure, because of all that hedging that was done, comes off, and there's no bid in this market. Okay, that's the only thing that's driving this thing higher, is this hedging into this week. So that's why we're saying we're waiting for the debt ceiling raise, and then we could also have to wait into OPEX. Well, now we have to wait through OPEX for what we think is going to be some pretty quick weakness to come into the market here, Bob. And so that's why we've seen the bid that we've seen day after day after day going into Friday here.
Yeah, and just so people know, it works both ways.
Yeah.
You guys remember a couple of years ago when oil was at $70 and then it ended up within a couple of weeks at minus $58? You say, now, how can oil go negative?
Yeah.
It's because what happens is that everybody that was long oil or oil producers, they had to start protecting their position. And once they started protecting their position, it became a self-fulfilling prophecy, and they had to keep adding to that protection until it reached a point of ridiculousness. And that's how you ended up with negative $58 oil. Well, the same thing happened here. Like if you look at NVIDIA, for example, people are saying, hey, I think NVIDIA's probably gone up enough. I'm going to short it. Well, as soon as they short it, the dealer on the other side has to protect himself. And then so they create a short squeeze. And you get to a point where enough people say, hey, I think this has gone up enough. And then once the dealer dealers don't have to hedge that position anymore. They join them on the other side. And that's why you always end up with these things called Eiffel Towers. And an Eiffel Tower for trading for us is that you have a parabolic move that comes back about 80% of the move higher. And so we have a parabolic move here since the middle of May, primarily for hedging against this narrative that we're having for a pause. Now, Phil and I are doing this interview podcast before the Fed meeting, okay? So we don't know whether or not they pause or not. But at the end of this done, it's called a known event. That's why maybe people say sell the news. This is why it's sell the news, is because people that have all these hedges on are either going to take profit or they're going to protect themselves, and then it just reverses the move that shot up in the first place. So that's why we just wait for these events to wash over, and then we look at it. Now, I think Phil and I will agree to be wrong is if by the end of next week, there's no movement down at all, because then we're past all the known events. Okay. But in that case, then you have a crack up boom here, and then our energy positions are going to go sky high, and probably precious metals too. So even if we're wrong on the macro, we're going to be right on the trade. And I think that's a point you guys need to understand when we do these podcasts. We think the macro picture sucks. Okay. It's a matter of time. But in the meantime, we're going to trade what's in front of us. And with that, Phil, I think that's enough to say. We'll find out tomorrow on our podcast if we paused or we lift it, because there's a little bit of a dump on OPEX day, and then the next day they reverse it. So that's what we're looking for.
Yeah, agree. All right, guys. Well, thanks for watching. Please hit like and subscribe, and let us know your thoughts on the comments below. And we'll see you on tomorrow's video. Take care. Bye-bye.
Bye.
Trade Genius.